Hello traders, I want to welcome you to my channel. My name is Rotimi Olawale. I'm a financial market analyst, Forex trader, and mentor. In this video, I'll be sharing with you the Trendline Trading Strategy. And this video is in response to the request by Olubodun Taiwo 3087, a subscriber on this channel. So that tells you that, I do read the comments you drop and I will respond to any video request made by anyone on this channel. So if you have another question, you want me to do a video in response to that, please drop that in the comment section. Any question on any topic in Forex trading, just drop it in the comment section and I will respond to you. And if you're yet to subscribe to my channel, please click the subscribe button and also the notification bell so that you can get notified whenever I drop a new video. All right, let's get started. So now we're looking at the Trendline Trading Strategy, and from the word trendline, firstly, the root word there is the trend. Now in Forex trading, we say that the trend is your friend until it bends. So the Trendline Trading Strategy, we're going to be looking at trend, that is the direction of the market, the overall direction of the market, and we'll be looking at trading opportunities in that direction. So that means that when the market is in an uptrend, we're going to be looking at bullish opportunities, and when the market is in a downtrend, then we're going to be looking at bearish opportunities. Now, opened on the chart now is the New Zealand JPY on the daily time frame, and we can clearly see that the market at this point is in an uptrend. So we can see that the price is making a series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, and on and on and on and on like that. So what this strategy is all about is being able to determine when price, we have higher lows, and the next time we have a higher low is this point. So we now drew a trend line to connect all the higher lows. Now, we're not going to force the trend line, you just draw it, and you can see like here, you can see that these other higher lows are not part of it, but there were plenty or many other higher lows that the trend line was able to connect, without any stress. So what the strategy is all about is that when price touches, when the trend line touches the higher lows, from the third time a touch happens, we expect price to bounce in the direction of the overall trend, which is a bullish direction. So when you're drawing a trend line, now generally for a trend line, you only need two higher lows in an uptrend. You only need the trend line to connect two higher lows to have a valid trend line. But from the third time, the trend line touches the higher low, then we expect a bounce in the bullish direction, meaning we're looking for bullish opportunities. So that means here is another bullish opportunity. This one is very close to the trend line. Here is another bullish opportunity, another bullish opportunity. And that means even here we had earlier on a bullish opportunity. And currently price is on the trend line again, means we're looking for another bullish opportunity. So we're going to use a vertical line to mark all these points, and we'll now go to a lower time frame, 4 hour or 1 hour, whichever one is applicable, and we'll now look for possible entry opportunities on those lower time frames. So I'll draw the trend line, the vertical line to across all these levels, about 5 of them. Now let's start with the 4 hour time frame. Now on the 4 hour time frame, I want to go to the first one, and that should be here. Now we can clearly see that price touched the trend line, and we're trying to look for entry opportunities, and we can draw a trend line from the most recent high down to the most recent low. In fact, if we take it a step further, we'll discover that this is actually a falling wedge. Now price is expected to break out of the falling wedge, which happened. We had our breakout candle here, and if you go to the next candle, you can see there that RSI, but that's the entry strategy. You need to wait for your RSI to be clearly above 50 after the breakout. Now in this case, MACD also, I think it's able to cross above 0. Even if it didn't cross initially, it's okay, but then eventually to also cross. Now we can clearly see here that we had a bounce from the daily time frame, a falling wedge on 4 hour, and a breakout. And we can clearly see that price was able to go as high as about 214 pips, even way higher, a retracement. But then let's just show the Fibonacci tool to be more precise. So we can drag our Fibonacci tool from the most recent high to the most recent low. And coincidentally, entries are Fibonacci 23.6 and to Fibonacci 50 gave about 85 pips, and to Fibonacci 61.8 gave about 120 pips. So price eventually even went as high as Fibonacci 100 at 243 pips. So you can see that this is a very valid and very potent, strategy which you can, adopt in trading the Forex market. Okay, so that's the first signal in quotes on that. So let's move to the other ones. And okay, this is the next vertical line we have here, and we can as well just draw a trend line. Now, it's not mandatory that it must be a falling wedge. Sometimes if it's just a trend line, it's still very, very valid. Likewise, so let's see this if we can have a falling wedge. Okay, I think we still ended up with a falling wedge right here. It's still okay. So we can see that there was actually a falling wedge again the second time and a bullish breakout. And this is the most recent high down to the most recent low, and entry again. This time around, price was able to break above Fibonacci 23.6. That's a breakout candle, and RSI was above 50 at that point, and price went as high as Fibonacci 61.8 at 129 pips. That's quite impressive, and that's on 4 hour on this particular setup. And the third time, you can see all of the setup, they're actually bullish because the trend is an uptrend, meaning in an uptrend, we look for buy opportunity. We say the trend is a friend. So we're trading in the line of the trend. We're not doing counter trend trading. We're not trading against the trend. Now, this is another one here, and I think it's better I flip to possibly a 1 hour time frame on this. I still end up with the falling wedge. So this happened on the 2nd of January 2024. So let's flip down to 2nd of January 2024. Okay, so 2nd January 2024. Let's flip down. Okay, I think that's it. Yeah, that's it here. You can see now a falling wedge again on 1 hour, and you can remember the trend is on the daily time frame. For the previous ones, we took the entry on 4 hour. This one, 1 hour is more applicable, and this is even so special because this ended up with an inverse head and shoulder pattern on 1 hour, and that led to a bullish breakout. And let's see, entries around Fibonacci 38.2. and price went as high as Fibonacci 61.8 at 40 pips to Fibonacci 78.6 at about 70 pips, and to Fibonacci 100 at about 108 pips. So that tells you that this is very valid. And let's go further. I think I'll take the last one right here, and I'll look at this. Right here, we could draw a trend line again. I think all of them seem to be falling wedges this time around, and it's not bad. It's quite valid. We had a falling wedge again on 4 hour, and we take our trend line our Fibonacci to drag from the most recent high to the most recent low, and entry at Fibonacci 23.6. That's after the breakout, and price went as high as Fibonacci 50 gave about 78 pips. Now, the price, reversed just on pips before Fibonacci 61.8. But by and large, all the ones we checked, they were all valid, trades that will have ended up in profit. All right, so that's a bullish, how to use, the trend line, for bullish, to trade in times of a bullish trend, to get bullish trading opportunities. Let's look at another instrument, and that's USD-CHF. Now, this is the USD-CHF on the daily time frame. Again, we can clearly see the price is in an uptrend. So I said a higher low, and the third time, this is the third time price touched the higher low, a bullish movement is expected. So we go again down to the lower time frame, which is 4 hour, or we check 1 hour, whichever one is applicable. Okay, I think I'd rather prefer to go down to 1 hour on this one. So let's go down to 1 hour. Now, right on 1 hour time frame, we could draw a trend line right here. And the second one at the back here gives us a valid, falling wedge again. And we can take our most recent high from here to the most recent low. And we can clearly see that price broke out. We have the breakout candle, and entry is just around this level, though there was a retracement, but price finally broke out. And the Fibonacci 61.8 was able to produce 37 pips. The price even went as high as Fibonacci 100, which gave about 100 pips. So this tells you that this, strategy are very, very valid. So we've looked at, bullish opportunities, trading the bullish trend on New Zealand JPY and Euros, USD CHF. I want to check now on bearish opportunities, on the Euro CHF and USD CAD. So this is a Euro CHF on the daily time frame, and we can clearly see a valid, downtrend on this currency pair on the daily time frame. So like I said earlier again, just as applicable to the bullish trend, the bearish trend, we only need price to touch the trend line the third time, or we start looking for bearish opportunity. So we start looking for bearish opportunity here. Look for a bearish opportunity here. We look for a bearish opportunity here. Another one right here. Another one, right here. So how many? 1, 2, 3, 4, 5. 5 bearish opportunities. So I'll put a vertical line tool on all of them, and we'll check as many as we can. At least we'll check a minimum of 3 out of these 5. 2, 3, 4, and 5. All right, so I've flipped now to the 4-hour time frame. So let's start from the beginning. Okay, so the first opportunity is right here, and we could have drawn our trend line this way, and we can see a clear, bearish breakout below the trend line. But this formed more like this pattern right here is actually a symmetrical triangle, and price broke out downwards in the direction of the prevailing trend, which is a bearish, trade. And let's use our Fibonacci tool. Though in a real sense, if it's a symmetrical triangle, we expect price to actually target the most recent low. So that should actually be what we should look at. And we had our breakout just at the tip of the candle right there, and that was able to make roughly about 137 pips. And we have another valid opportunity right here. It will be a bit difficult to go back to 1 hour on this, but then let's just use it on the 4-hour using Fibonacci. And this also produced about 45 pips to Fibonacci 61.8. Now, if you want to know how to use the Fibonacci strategy, how to use your Fibonacci tool to get or take profit levels, please go to the video on my channel, Fibonacci Trading Strategies, or simple Fibonacci Trading Strategies, something like that. Just look for that video. You will really understand how to use the Fibonacci tool from that video. Also, we have another bearish trend here, and another one. This one here should be on 1 hour, on and on like that. And you can see for all of them, actually your sell is more valid after the RSI crosses below 50. So you can also check the RSI strategy. Check the RSI strategy also in one of my videos on the channel. So it'll also give you a better understanding of how to use the RSI. That's the relative strength index. And finally, we have the last one right here. This is a big one. And we can actually draw a trend line, but on a closer look, this is actually looking a lot like a head and shoulder pattern, which leads to a massive, very massive breakout. And using the Fibonacci tool on this one, we will clearly see that price was able to, from the point of entry, which is Fibonacci 23.6 in this case, to Fibonacci 61.8, price dropped a massive 107, pips thereabout. All right, so that's it. Again, looking at how, we can trade the trend with trend lines, just trend lines, and adding other strategies, other chart patterns and candlesticks as applicable in this case. Basically, we're just trading the trend. So finally, we'll look at USD CAD. And this is USD CAD on the daily time frame. Now, it's always better to go to the higher time frame, to determine the trend, then come down to a lower time frame, preferably 4 hour or 1 hour to look for the entry. And now you can do the same thing. You can look for a trend on 4 hour and look for entry probably on 15 minutes time frame. It's equally applicable. So this is USD CAD on the daily time frame. You can see the trend line second, and this is the third time price touching the trend line, and this is the fourth time. So here we're looking for a bearish, opportunity. Likewise, let's look specifically at this. So we'll flip down to 4 hour, and we can clearly draw a trend line. And we can see price dropping, massively. Let's flip down to 1 hour. All right. Okay, so we can see here, there's a breakout candle that's around Fibonacci 38.2. There was a minor retracement, then a massive breakout even to 100, Fibonacci 100 and below, which gave us 71 pips. All right, that's going to be all from me. Now, I think with this video, you can now understand better how to trade the trend, using trend lines, and how to trade continuation patterns. Oh, this eventually also ended up forming a head and shoulder, which is in line with the overall trend, which is bearish. So if you enjoyed this video, just click the like button, subscribe to this channel, share this video, and drop your comments in the comment section. Also, make sure you click on the notification bell when you're subscribing so that you can receive more videos, from me. You can get instant notification whenever I drop a new video. All right, that's going to be all for now. I'll see you in my next video. Bye.